Hi guys, good morning. I'm off to StockSmart's Singapore. So we're just here waiting for the flight. But before that, also, I'd just like to give you an update on what's, happening to the market and its relation to the GDP results. I got a lot of questions yesterday asking about how does this impact our markets and what will be the biggest base effect of the GDP results as I guess in parlance what's happening in the PSEi, and a lot of people were expecting a high yield or high GDP. So I guess that's what we're gonna break down in the next few minutes. So I'll just wait for you guys to join us. A few seconds for people to join this Facebook session, and then we'll start. We'll talk about it in a bit. So markets open in an hour. Yesterday it reacted quite negatively with regards to what's happening. So I don't know about you, but what are you thinking about the open this morning? First, we have people joining us already. We have Steph Madia. Hello, good morning. You're the first one to actually post. Now you have Anthony Abogada from Haiti. Hello to everyone from Haiti. Madami ba dyan, Anthony, sa mga kababayan natin na nag-target to the stock market. And hello to you guys from Haiti. I think it's good evening there already, right? Then you have Colme Dexter, good morning to you as well. Good morning. Alright, so just a few more seconds and we'll start. Si Awe, good morning to you. Good morning. Hope you guys are doing well. Then you have Khalil Fernandez. Good morning to you. Alma Madela. Good morning. So, ayan, everyone's here now. You have Chris Pear from Doha. So you're awake already at 3 a.m. Chris, so good morning to you. Alright, and then you have Pauline Chavez, Chen Caballero, good morning to all of you. So let's break down the PSEi and the GDP first. Alright, may humahabol pa Grace Cruz, Roberto De La Cruz, good morning. Gadget Stopesh, good morning. Okay, now let's break down the index and the GDP. First of all, we got a GDP of 6.4%. 6.4% in all intents and purposes is not bad at all. It still places us as the second best performing and fastest growing GDP in our region. I repeat, at 6.4%, it still places us as the second best performing GDP in our region, where a lot of the more developed countries are just at 2%, 3%, 4%. Indonesia's is at 5%. China's at 6.9%, which places it as the fastest growing in the region as of this moment. But 6.4% is not so bad. A couple of things that I need to add to that, though. However, we're also a victim of our own. We're also a victim of our own success because of good showing of our GDP over the past few years. A lot of people were hoping that we would get something higher. We would get something. People were expecting a higher GDP rate. They were expecting around 7 or 7.2. It was around 6. And even the government was pegging it around 6.5 to around 7.5 GDP. So what actually happened here was this: in spite of us getting 6.4, which is relatively faster, we didn't meet expectations. So what does that mean? In the world of investing, no matter how good you perform, if expectations are higher and you underperform, it places investors in a sentiment that's not so positive. So what does it mean for the stock market as well? If people are not so positive and they don't like that, you have to understand GDP is our output as a whole. It's our report card. It's what majority of the countries look at as to how good we performed over the past quarter. And a lot of people were also parang looking at this as a measurement stick also, since this places the Duterte administration as in its third quarter of presidency. So they were trying to measure it as well as something if it would have been good or bad. So I'll break it down even further. Yung GDP natin, it had such a high base in 2016 because also mataas yung GDP natin in 2016 because of election spending. Number two, because construction was relatively in full swing at the end of Aquino's term, compared to what they were saying was it was part of the transition period of what's happening now because of Duterte's president, that there had to be some adjustments made. Also, I'd like to point out a couple of things as well. When you look at consumer spending, it somehow dropped from 7.1% to 5.7%. I repeat, consumer spending, which is what people hedge, that's the growth sector of our economy. Last year was 7.1, it dropped to 5.7, which is something that we might also need to consider. We need to study further for the very reason that, number one, OFW remittances are up, but consumer spending is down. And a good friend, Juneri from PSEi, mentioned that probably spending is down because as compared to last year, it was election year and there were bigger spendings. There were a larger amount of spending in the first quarter of that year compared to where we are now. But two things that needs to be considered and that need to be looked at further is government spending. Government spending constituted 11.8% first quarter last year compared to just 0.2% this year. So what the government said though was they expect the pipeline of projects to come out second, third, fourth quarter this year, and everything will go in full swing. So that's something we need to watch out for. And lastly, capital formation that dropped significantly also from 31.5 to around 7.9% as well. So I guess those are the hallmarks that need to be watched out for. Those are the things that significantly dropped. Agriculture though is a bright spot, which is around I think 4.4%. Which is good because we've really been waiting for a resurgence from the agriculture industry as well. So how does it translate to the Philippine Stock Exchange? Let me show you. Let me pull up the chart that I've been looking at. Again, everything that I talk about when it comes to I guess mentioning where the market is from the context of technical analysis. For those who don't know what technical analysis is, technical analysis is a science, a mathematical tool that allows you to look at the trend, to follow where the market direction is headed based on past prices. So it's totally different from fundamentals, where in fundamental analysis you use macroeconomic data, you use financial statements for you to determine if the company is good or not. The difference with technicals is you base everything from what the charts are saying. So why am I saying this? A couple of things. Here's a chart. First, let me pull it up for you. Hello pala to Mix Flores from Thailand who joined us as well. So there, look at this. Oops. There. I'm basing everything from this chart. So if you see everything, I placed 4 moving averages, one relatively quick, and then the two or three that's relatively slower. Then I placed a resistance line at around 8.1 and a support line at around 7.7 and 7.584 as a short-term support line. So look at this now. Prior to the release of the GDP results, if you zoom in, you would actually see at this portion around here, the stock or the PSEi already dropped the 10-day moving average. Meaning, regardless if there was any good news or bad news, the market was already in some sort of correction, in some sort of profit-taking mode. As you've seen that it made a quick run up already from where it was when it turned bullish. You have to remember, I mentioned that a few months ago that when the market hit and broke out of 7,400, the market turned bullish. Again, I repeat, as the market broke out of 7.4, it started to turn bullish. So since then, the market started to go up. But a few days prior to the release of the GDP, we saw the market start to correct and start to go down. Meaning, you've seen a sizable correction when the 10-day moving average did not hold as well. So prior to the release of the GDP, we already have a break from a short-term moving average. I repeat, prior to the release of the GDP, we already had a breakdown from a short-term moving average, which is what's causing the downward movement that we have now. So here are the things that you need to see. I've said this over and over that we have a 7,700 support. Again, we have a 7,700 support level. Who's Marcos? Who's that Marcos? Anyways, we had a 7,700 support level. So if 7,700 does not hold as a support level, we might see the market go even lower. I repeat, if the market does not hold 7,700, we might see it go down to around 7,585. However, if it bounces from 7.7, there's a possibility that the market will go to 8,000. Can challenge and go back again, but it has to break out from the short-term moving average of around 7.8. So here's it for the short term. Number one, 7.7. If 7.7 does not hold, the market can drop and go down to 7,584. Again, if the market does not hold, it will go to 7,584. But from if it bounces from 7.7, you could possibly go back up to 7,830 over the short term. The market still in general though is still bullish. I repeat, the market in general is still bullish. For position traders, there's no need to tap the panic button yet. There's no need to take profits yet. But for quick traders, it would be prudent to respect the support and resistances that I've mentioned over the short term. That we have a support at 7.7. If that does not hold, 7.585. If 7.7 bounces off, you could go back to 7.830 over the short term, and it can challenge around 8,100 even at a longer period of time. So I guess that's it. Sige, gadgets. I'll ask kung taga Gilas siya. Kasi a new player, I haven't really followed Gilas Pilipinas lately, no? So there. I guess that's it for now. So another thing that you need to understand: the Philippine Stock Exchange, the stock market as a whole, is a leading indicator. The economic data is a lagging indicator. So meaning, whatever happens in the economy, whatever results that have been placed out, is already priced into whatever action or whatever movement that you see in the stock market. So for me, as a trader, my goal is to follow the trend. As a trader, my goal is to follow the direction of where the market is, and then I let economic data be the substance, the value, to see if the market will actually propel higher and go high as well. So there. I guess that's it. I hope it helps you trade in the market, and to all of our kababayans in Singapore, I hope to see you all there. Tomorrow I'll be landing here tonight. Let me check. Hello, sir. Are you from Gilas Pilipinas? Oh, okay. Sorry. Oh, can you say hi to people? We're in Facebook Live.
How you doing, everybody?
Hi, sir. Can you say hi to your friends here?
Hey, hello.
Thank you. You have some fans here. Ayan, so that's for you, gadgets. Okay. I think they're headed somewhere. I think they're headed back, I guess. You guys heading home?
Yeah.
Okay, have a great flight ahead. Okay, so and that's it. Those are for you. Hope you guys enjoy the video. Stocks by request. I'll post it in Singapore later tonight. I hope you guys, I guess, have a great trading day ahead. We're boarding in like 10 to 15 minutes. So I hope that helps you. For those who just joined us today, I'll be posting the link below. I'm uploading this on YouTube and in my website, and I hope this helps you. Yeah, it's Adre Blatche pala. I haven't really followed Gilas lately, no. So thank you, Anthony Bugada, for mentioning that. So, and I think he's from the Washington Wizards at some point in time. I got distracted tuloy sa Facebook Live. For those who are not following basketball, I'm sorry for that disruption. But yeah, sige, more updates on the PSEi, more updates on what's happening in the market soon. I thank you so much for everyone that's joined us. Have a great day ahead. Have a great day, guys. Hope that this Facebook Live updates would help you. I'm gonna make more and more of this, as long as you find this beneficial, and as long as this is something that helps you in the market. So again, just to recap everything, it's relatively slow, the GDP, but it's still fast compared to our region in general. For those who want to get a breakdown of all of that, just join the video once again, and this will be in other portions of the website and YouTube as well. So thank you to Kababayan Singapore. See you tonight and see you tomorrow for Stock Smarts. God bless you. And again, the biggest desire and the greatest desire, that's why I do this, is I really want you guys to be successful. I want to see more and more Filipinos invest well and trade the markets properly, trade the markets with conviction and confidence, because it's time that all of us take part of this economic growth. So 6.4% GDP won't mean anything if we're not investing, if you don't take advantage of it. And I do hope you take advantage of it, and I do hope that no Filipino really gets left behind, that we take part of the growth, we take part of this growing economy as well. So God bless you on behalf of the entire Stock Smarts team. It's just an honor to be part of your journey towards financial freedom. So thank you and God bless. See you all again.